Hi guys, thanks for tuning in to another episode of Nuggets News. Today, welcome back a very special guest, and that's Raoul from Real Vision. No pressure, Raoul, but our last interview was probably the most popular one we ever did and got over 100,000 views on YouTube and our podcast. So, we'll try and replicate that today, but thanks again for joining us.
Yeah, great to be here as ever.
And I think last time we spoke, 6, 8, 9 months ago now, a lot of which has come true. And we're talking about debt, demographics, and deflation, and these macro themes, and you saw trouble on the horizon. Since then, a lot has changed. I mean, in the pre-interview, we were joking about how 3 weeks ago the headlines were central banks to save us from climate change, and we had the bushfires in Australia. That all got people talking, and even that created a lot of arguments on social media about, is this the cause? Who do we blame? What's going to happen now? And all of a sudden, that's all been forgotten because of the coronavirus and this contagion. So I guess I just wanted to get your thoughts on what's sort of changed since we last spoke, and how you're seeing what's happened in the last few weeks.
So to frame it in the only possible way I can frame it, this is probably the largest economic event of all of our lifetimes. We were already slowing down, as you and I talked about last time, and anybody who's heard me talk, we were heading towards recession globally. Europe was just starting to fall apart at the beginning of the year again. Asia was already slow, and world trade was negative. That was to do with both the Federal Reserve tightenings from a year and a half prior to that, which is how long they take to work through into the economy, and that's why the yield curve inverted. And then we had trade tariffs on top, which was the icing on the cake. So we knew we were set for a recession, but with a recession, you never know if it's going to be bad, mild, whatever, right? Was it 1990? I mean, Australia, you don't know what recessions are, but it's when the economy goes down a bit and your house price falls. But but generally speaking, 1990 was a mild recession. 2001 was mild-ish, but bad on the stock market. 2008 was bad. 1929 was awful. 1974 was awful. Those were the big kind of US global recessions. So it wasn't clear where we were going, and then by mid-January, it became absolutely clear what was about to happen. Was that we were about to go into the largest demand and supply shock the world had probably ever seen. And that is something truly extraordinary to say, but unless you understand the magnitude of what China did, they shut down their entire economy for the sake of for their social economy, really. So they sacrificed their economy for their social economy, to look after the people, because they realized very quickly this pandemic was killed enough people. It made enough people hospitalized that it overwhelms the entire hospital supply, and it spread like crazy, faster than the Spanish flu did that killed 30 million people back in 1918. So you had a situation where China reacted very fast, as fast as they kind of knew. There was a lag, 3-week lag, before they caught up, and then they really did the best. And you can see the outcome is they flattened out the rates of growth of the virus, which is what you do in a pandemic. You try and stop that really peaky normal distribution, which is maximum number of people get ill. It overloads the whole system, shuts down the economy, kills a lot of people, and you try and flatten it down by quarantining, looking for ways to keep people healthier, do all the things you can to flatten it down, and then you can deal with it by vaccination, or you hope it's seasonal. So China led the way. Then Singapore, super quick, super fast. Hong Kong, super fast. They knew about it from SARS. They knew what to do. Excellent preparation, and they managed to lower the rate of growth quickly. South Korea was a bit late in the game, shot up, and then suddenly they had a phenomenal amount of testing, more than any other country in the world. Mobile tracking devices for everybody's got the virus, what's going on, incredible efforts. But those are very compliant, well-run economies where you can do something like that. Iran was the next bomb. And that literally blew up. I mean, the parliament was ill, everybody was ill, people dying everywhere, and it's a real mess. And then it was Italy. And Italy was beyond what people were thinking because they were slow. They were slow to react. And now they're trying to quarantine, and they've got not China-style quarantine with troops, they've got Italy-style quarantine, where they've still got bloody flights every 5 minutes from Malpensa, in Milan. So what Italy, obviously, being the second largest industrial hub in all of Europe, northern Italy, outside of Germany, meant that it spread everywhere. And then it's exploding in France, it's exploding in Spain, it's exploding in Germany, it's exploding in the UK. And so that is the story of today. The markets know that because it's in the price. The story of tomorrow is the US. And then the story behind that is the Southern Hemisphere. So the story of tomorrow, coming up in the next 3 weeks, is the fact that the US has done the worst job of all. They've had the virus for 6 weeks now, and they have not done any testing. As of yesterday, they've done 1,700 tests. The probability of them having at least 20,000 cases already is extremely high. We're already seeing New York going into rolling shutdown, Seattle's going into rolling shutdown, and it's going to be everywhere. In the next 3 weeks, as these tests get forced because the CDC is dragging their heels and the government's dragging their heels because they don't want to show the truth, the market's going to catch up with the reality. So we've got this window of opportunity between now and the next 3 to 4 weeks, which is epically terrifying because markets can't deal with uncertainty and we don't know what size of the tail risk. Do we have 5,000 cases in the US? Do we have 50,000? Do we have 100,000? We literally have no idea. And the market's going to see these numbers and they're going to be huge at first because the tests are going to show that, and it's going to scare the hell out of everybody. So that is the real issue coming, and the US is going to go to rolling shutdown, which is the largest economy in the world. Europe's already shutting down the football games, music festivals, everything is going to shut down. The UK will follow suit, and then we're hoping there's a seasonality effect. If there's no seasonality effect, then we're really screwed. If there is some, and it lowers the RO somewhat, which I think will be the case, but somewhat, well, guess what? It's your winter, and it's Brazil's winter, and it's a whole bunch of other countries, South Africa's winter, and that could get really ugly because then you've got virus. There's no way Brazil can contain a virus. There's no way. I mean, India's just starting to go exponential. There's no way India can contain a virus. So it risks being, at best, as big a recession as 2008, at worst, a depression.
Yeah, so I just want to dive into a couple of things you've said there. And again, putting my pharmacy cap on, this is something that a month ago when I did a video about how bad this could be, it was because of the characteristics of the virus and how contagious it was. And I know some people are saying it's just a flu, and that might be relevant to the symptoms, but it's not relevant to the spread and what it's going to do to global supply chains and economies. So what we've seen, as you say, is places like China that have these dictatorships where they can shut everything down and try and contain it. South Korea, other countries that have seen SARS, they're well prepared, and their people know as well and take this seriously. And then we've got the other example of Italy, as you say, which isn't a developing nation. They've got a good healthcare system, and some of the threads you've been reading on Twitter are terrifying. And they're saying that 10% of cases resolve into the ICU. ICUs are going to be overloaded in Australia and the US. So as you say, in the US, they're not taking it seriously. They haven't done enough testing. And we've got this silent spreading at the moment that I think is going to be 100,000 cases this month, as you say. Same in Australia. People are, she'll be right, mate. They're not taking this seriously. Our Prime Minister's saying that it's not going to affect the wider community. My wife's a teacher. The Department of Health sent around an email to all students and parents saying that it isn't going to affect your day-to-day lives and the wider community. This is the attitude in Australia at the moment, and it is scary that we're not taking this seriously. And then you've got your developing countries which don't have the healthcare system, the means to contain it, and they live in these population-dense areas where it's going to spread like wildfire.
But also, this is like I've mentioned this before, this is like a nuclear weapon for baby boomers, right? So the Western developed world is all baby boomers. It's the largest group of voters, it's the largest group of wealth holders. They're all going into retirement, and this is like it's aimed at them. Now, all the governments are baby boomers too, outside of New Zealand and some of the Nordic countries. They're all baby boomers. So we're already seeing government officials going down in France, Sweden, the US is already members of Congress. So it's going to hit both the governments because they're going around shaking hands with everybody. I mean, Christ, the Democratic National Convention. I mean, this stuff's stupid. The caucus in the US. And then it's going to be their voters. So it is a really complicated, dangerous situation, and it is only going to lead to outsized responses by governments. And everybody who's slow to do it now is going to be fast to catch up later because they'll realise that they're going to kill their voters if they're not careful.
Absolutely. So maybe let's we can keep talking about the relevant points as they come up, but I want to talk about the markets now. And one of the reasons that I think that this has been the biggest crash is because markets, they've got a lot of inside information, the algorithms, this, that, and the other. A lot of these trend trading things, everything was going up, and they're not healthcare professionals. They didn't take this seriously. They weren't aware of what was going on and how bad it was going to be. And then all of a sudden they're having to price this in and going, oh my God, look at the China numbers. I think you were saying some of the stats were the worst you've seen in your career. And these are the sort of things we're going to see in other countries. In Australia, wow, when China, what's the saying? When China sneezes, Australia catches a cold. Literally, it is going to be so bad for us.
Exactly right. I mean, it's a huge economic deal for everybody. And people really didn't understand it. And most people live in the present. Well, the death rate's low. What's the problem? It hits old people, right? That's the current present narrative. Then it's like, oh God, it's spreading quite fast in Europe. I'm a little bit nervous. There's a few cases in Seattle and Melbourne or whatever. And then it goes to, oh, this is going to be really bad because my school's just sent a note around saying my kids are home. My firm has just sent a note saying I have to stay home for a month. We're all stuck in the house together, murdering each other, and we can't spend any money, we can't go anywhere, we can't do anything. Well, imagine every restaurant owner, any small shop owner. I mean, it's a huge impact. I mean, let alone the airlines and the travel industry and the shipping industry. I mean, the whole lot is going to grind to a complete and utter halt. So even if Australia doesn't take it seriously, you won't be able to go into any countries. There's nowhere to go. It's already in 111 countries, this virus. So, the medical people picked it up fast. Finance people picked it up relatively fast. The Twitter community was pretty good because, our job is to extrapolate probabilities out into the future. And so we have to become experts, or not experts, but we need to get up to speed with what's going on. So we seek out expert advice from virus experts, etc. But the general investing public and the general public didn't. So Facebook was it. I remember it was 2 weekends ago, I was on Twitter and we were all talking about the virus and what it means and debating it out, blah, blah, blah. And I go on Facebook, it was cat videos. I'm like, we're fucked. I mean, there's nobody can do it. These people are so unprepared. I remember telling my sister just last weekend, I'm like, have you gone to buy any supplies yet? Are you washing your hands? Are you just doing the basic precautions? She's like, ha, 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 ha. No, it's just the flu. It's not going to matter. People are buying toilet roll. How silly they are. I'm like, yeah, it's silly to buy toilet roll, but you don't realise how serious it is. And now suddenly this week, she's like, oh my God, I'm terrified.
Yeah, no, we had a
behaviour.
We had a family gathering last weekend, and my in-laws and that are going overseas in Europe in a few weeks, and I'm telling them you're probably not going to go, and they're just looking at me like I'm wearing a tinfoil hat. So I think that comes from Donald Trump tweeted yesterday, it's just the flu and look at these number of cases versus this. So that's the attitude still of them, and the mainstream narrative that people are watching the nightly news are being fed, and it is going to shock them and hit them hard. But next thing I wanted to talk about was really the second order effects. In Italy last night, we saw them say that no one's going to have to pay their mortgage. What are your thoughts on that? Can you do that? Is this going to affect? Can you tell a private homeowner that he's no longer allowed to charge rent? I mean, how does all this play out if things like that are going to happen?
Look, it all plays out in the way that the central banks have to the only trick they know is to try and stimulate. So they will do anything they can. Look, it does make sense, but why do you stop at mortgage owners? What about the restaurants who are out of business now? Do you keep them? I mean, Trump's just announced about shale. Where do you draw the line here? Who can you protect? Now, at first it sounds like a good idea, then it sounds like a $10 trillion problem. Now, look, the European banks have just broken the cliff of death, 30-year trend support. The Japanese banks are going to go. So the ECB and the BOJ are going to have to step in at some point and support their banking system. So they inject the money into the banking system to try and lend money out. You've got zombie banks all over. It's a total mess. And this is, you and I have talked about in the past, this is one of the reasons that I think we end up moving towards the alternative future that you and I talk a lot about in the digital world, because in the end, I don't see an answer. If this does, let's say the worst case scenario, this picks up again in the Northern Hemisphere winter, right? This is then easily the biggest economic event any of us will ever witness, and it's probably bigger than the 1930s, and in which case, we're going to lose a lot of the financial system, the pension system, and all of that stuff.
Yeah. Just to pick that apart a bit further, as you were saying, if you start telling people they don't have to pay their mortgages, look at Australia's banks. They're the most exposed to mortgage books in the world. We're dropping interest rates. I mean, in Europe, they're already at minus 50 basis points. What are they going to do? Drop it to minus 60? It doesn't do anything. No one goes out and decides they're going to go to a restaurant because they're negative 10 basis points lower, and the banks aren't getting those mortgage payments. The banks are weaker. All of a sudden, it ends up being a bailout for households, and then the banks, and then, as you say, restaurants, airlines. Where does it stop? And then this is all a side effect of central banks extending that business cycle. Businesses that aren't healthy shouldn't be around the zombies, but now it's the healthy businesses that aren't going to survive either, and you can't bail everyone out.
No. I mean, I literally don't know the answer, and nobody does. That's why this was such a perfect black swan event, because we knew how to deal with the financial crisis. We never thought demand and supply could go to zero. It literally was in no textbook. The only time that ever happens is probably civil war. Even in World War, you get, there's a decent amount of demand in a world war, in large scale wars. But this is a demand supply. I mean, it is the biggest black swan I could have ever imagined. Even though everybody's been warning about it, we knew it was coming at some point. And the good thing is at the end of this, we'll know how to deal with it. But we've never dealt. It's like suddenly the hurricane belt moves and shifts to London, England. They're going to have to learn how to deal with hurricanes, and we have to learn to deal with pandemics.
Can you just walk people through a supply shock versus a demand shock, and maybe some examples like the GFC in the past?
Really simple. Supply shock is when somebody stops making stuff and you can't get it. And a demand shock is when everybody stops buying it. When you've got both, that's a total implosion of an economy. So if you look at what happened in China, every single factory shut down, basically, and everybody stopped buying. There was still demand for foreigners, but the supply shock meant that they couldn't get their goods. So Apple couldn't get component parts. So that was and anything that they sold to China stopped. So everybody suffered from that China situation. China themselves took the most pain of all. When you're doing it on a global level, I mean, we've never seen it. I mean, I have no descriptor. You might as well throw a meteorite at the Earth. I mean, we have never seen anything like this before.
I think a few weeks back on Twitter, I tweeted something like, we forget how fragile we are as a society in terms of nature, or just our place in the whole ecosystem.
So built on hubris about aren't we the greatest things on Earth, and we're all about to turn into machines and robots, and everyone can be a coder. Then comes along Mother Nature and just shows exactly who's the boss around here. Right? We're just nothing in this whole equation. But we do suffer from hubris. And the recent rise of Silicon Valley has led to excessive hubris about immortality and the greatness of human beings. And along comes a pandemic that could kill 60 million people. And that kind of makes people realize that we're nothing in this.
Exactly. When you just stop and think that a bat in a cave, has infected an animal that's probably gone to a market, or look, maybe this has come from the lab, or whatever it is, it doesn't matter. It affects the whole world within a few weeks. And for those people that have that different way of life, Raoul, if you're going for your walk on the beach, or I'm going into the bush in Tasmania, and we're going to be better off. We're not going to be as stressed as these people that are living in cities that are, they're all about their Instagram and their likes and going to their cafes. I think it's going to really shake people up.
I was speaking to a mate of mine in Singapore this morning, and he was like, "Look, we've been shut down for a while now." He said, kids drive me mad. The wife hates me. The dogs hate me. We're stuck in the house. I have to go out with a mask all the time. Nobody goes to restaurants. If you go into restaurants, you have to show your full ID. They basically have to track everybody who went into the restaurant, all the names. They take your temperature. You're in a different world. So the psychological effect that has, and I'm just talking to some of the girls in the office, and when I first started getting concerned, they're the typical Instagram crowd, and they're like, "Well, what are you worried about?" And now they're freaking out because they're suddenly realizing they know nothing. I mean, I was in New York, the last trip I'll do for a while. I was in New York last week, and I realized how difficult it was to actually avoid touching stuff that could be contaminated, that could have the virus, right? So I'm washing my hands and I've got my spray, but I get into a taxi and I open a door and then I pick up a glass in a restaurant and have a drink. And who's touched the? I mean, like, there is no chance of avoiding it in the big city.
Mm.
It's different if you can keep, at home it's easier. I'm lucky enough to live in a country that's not overly populated. So we're going to get hit, obviously. And in Ireland, if it gets hit, hits everybody because there's 1 degree of separation for everybody. Mm. But there's some of us, it's easier to contain. But for others, I mean, there's just no chance.
And I just want to talk about Australia for a minute because, again, I don't think we're taking this seriously. Case numbers are very low. I don't know if we're doing as much testing as other countries, certainly more than America. But when you see the first couple of cases from Iran and the second case in Australia was down in Tasmania, in my hometown, we're still letting people in from Italy with just scanning their thermometers to see if they've got a temperature. We haven't even shut our borders yet. I've heard cases of...
I mean, the temperature thing is ludicrous, right? That's the SARS response, because SARS, when you showed the illness, you spread it. So easy thing, test temperature, great way of containing the virus. But this has a 2 week to 4 week incubation period and can reinfect after you've recovered. So it doesn't show up. I mean, there's literally no point taking your temperature because guess what? If you've got a temperature, you're not really going to be going to the restaurant or going for or catching a flight. You're going to be at home because you're feeling pretty bad. Yeah. So it's a ludicrous way of doing it, and this is the problem. And the countries who had it, like Iran, they didn't stop their flights leaving soon enough. They should have taken responsibility for the rest of the world. China didn't take responsibility either. Flights flooding out of China. They should have shut down their own borders as well as their own towns. But Italy didn't do it, and now it's going to go to the US, and the US has been so slow that, it's I don't know how you can contain a country with 350 million guns.
Absolutely. And I know in Australia, my friends that work at the hospital, they've had their crisis meetings this week and they are preparing to do whatever they can do to try and support people because we know that it's going to hit people's lungs. We need ventilators, we need ICU, oxygen, and we just don't have the means to deal with the case numbers that mathematically we're looking at.
Yeah, I was just spent yesterday here with a friend of mine who runs one of the hospitals here. Same thing. We're going through one good thing about the Cayman Islands. It has a hurricane preparedness. And we've just gone through an earthquake. And so we have within the national psyche in the Cayman Islands an understanding of what it takes as a community to prepare and the hardship you have to endure. So Hurricane Ivan was a really big one here back in 2004. And basically the island went underwater off the satellite, and then it took 6 months really to recover. And people got through it. They worked as a community because it's a small enough nation, and they knew what it was like to share stuff. They knew what it was like to keep some cash always in reserves. They knew it was like had to have gas in your car and food supplies and water supplies. But most nations just don't have that preparedness. And yes, it's going to overwhelm our hospital system. We just don't have a big enough hospital system. But luckily, we're relatively prepared. But we'll see. You never know.
So let's talk about what people can do. We might do you want to start with financially, or do you want to start with preparedness and health-wise and mentally first?
Look, this is the point that we say, both of us say that we aren't doctors. Or I'd say I'm not a doctor. And so I don't honestly know. What I know is just keep away from people. I mean, this social distancing proves to work. That's one thing. So just, it's like I'm just been invited to a really nice drinks party with a bunch of mates on Friday. And they're all travellers, all in the finance industry. They've all been travelling around the world. Come back to Cayman, let's all get together. I'm thinking, I don't really want to do that. Just because, we all have a social responsibility not to spread the virus on. So you might think, well, I'm young and I can survive a flu, and most of the cases are mild. The problem is you passing it on to others. And before you know it, you've killed your grandmother. It's just we have a social responsibility not to do it. So I think about it in those terms. I think, okay, what is it I need to do? I need to make sure I've got the cash. I've already done the food shopping. While everybody's buying toilet roll, which I don't really understand, but done the food shopping, because again, we have a hurricane store, of food. So we just replace the stuff that's gone past the sell-by date, add some more stuff, stock up the freezer, get yourselves prepared, make sure you're washing your hands. So anybody who comes into the office from outside washes their hands, sterilizes them. So, basically everybody's clean coming into the office, and just following standard protocol of that and social distancing and being prepared for a month of no income or whatever it may be. Good thing is we won't be spending a lot. So that's good. I think that's the best single way that we can all do our thing in this. It's kind of like a war, and you have to do your part and not be selfish. It's some people are selfish and they think, yes, I should be traveling and I've just come from England. I've been hanging out with some mates who've just come from Italy, but I need to do that business trip to New York. Well, you don't, because it's not fair to be at Heathrow Airport if you're coming from England, with 4 million people, then getting on a plane, it's just, don't do it. Just take the pain, take the economic pain. We share it across all of us. It's okay.
Yeah, and I think, again, we want to highlight for people at home that majority of people aren't probably going to get sick. And we're not talking about this, zombie apocalypse or Mad Max scenario. Most people aren't going to get sick. So health-wise, you're going to be fine. It's just a matter of bunkering down for however long it takes, as you say. So maybe let's talk about financially. And I know the bond trade, Raoul, that's probably been the trade of your lifetime now. And for people at home that were talking about where to put their money, and bonds have absolutely gone up in price. And so a lot of confusion on social media with people saying bonds are crashing. No, guys, that is the yield on the bonds. That means that everyone's buying them and the price of the bond is going up. So that's been a magnificent trade, as like a lot of people, the saying we have on the channel is water finds its level. And the US is never going to stay at 2% when Europe's at minus 50 basis points. And that's all that's happened. It sounds simple when you put it like that, Raoul, but do you want to walk us through, because is that your best trade of your lifetime now?
Yeah, I didn't look. I have this investment framework. I thought the world was slowing down, and bonds are always the best trade in that environment. Everybody wants to do the vanity trade of shorting stocks. And I knew, don't ignore it. The bond trade works. Risk-adjusted returns are the best in the world. But to be clear, I have never, ever, ever seen anything like the last 2 weeks we've gone through in the bond market. These are the safest instruments on earth, driving the highest returns of any asset price in the world over a 2-week period. It's extraordinary. Bonds have now beaten equities on like a 2-year, 5-year, 10-year, and 20-year time horizon. Yeah. It's astonishing. Now, that is driven by a lot of technical reasons, including the fact that the entire pension system's underweight. And also, the more bond yields go, the more bonds they need to own, because they need to have a fixed return to pay these pensions. It's a total mess. It shows you the mess of the financial system, as opposed to just the water finding its level. There's actually a structural problem here, and people haven't really picked that up. And that's really the pension system that's the structural problem, because they, particularly in the US, were taking way too much risk versus the age of their retiree cohort, which is at retirement age right now.
And if I can... Yeah, go on. I was going to say, if I can simplify this a bit more for people at home, sometimes the greatest trade you'll make is when everyone's on the other side of the boat. And then what we saw was just so much speculation, and everyone was pushing their money into the stock market to get higher returns. And then this huge rotation from all the funds, as you say, to the safety of a bond. And for people that don't understand bonds, you can think of it like a government savings account that's guaranteeing to pay you whatever the 1% that it is at the moment. So everyone wants to get out of that risky asset, and they want to go into their nice cozy little government savings account that's going to pay them 1%. And that huge rotation of money has just pushed up the price of those bonds. It's been a fantastic trade.
And the other thing to understand is that most of our pension funds run this thing called a balanced portfolio, like 60% equities, 40% bonds, or 70-30. And that works because usually when equities fall in price, bonds go up in price, because they tend to work well when the economy's bad or there's some risk around. And if bonds are going down because there's a bit of inflation or something else, usually equities do okay. There's times that they move together. The problem is when bond yields go to zero, they stop going up in price, generally. They might go to negative rates, but generally they don't work anymore. So they just act as a bank, as a cash deposit now. So what happens is the risk in equities is not offset by the risk in bonds. So the pension funds end up having to sell a ton of equities to bring the risk down to a level that is commensurate with what they're trying to do. So it creates some really structural problems within this.
And do you think that bonds are to this point now, as you say, where they're going to be zero or maybe negative in the US? In Australia, I think we're going down that path as well. It's going to be everywhere with the levels of debt. Are bonds no longer that safe haven because of that? Was there this play where everyone thought that central banks are going to print more money and buy the bonds office at a higher price? And now it's kind of like, well, is everyone's going to be printing so much money? Maybe governments are just going to spend MMT style.
I'm not sure that affects bonds because of the bid from the pension system. I think China could sell all its bonds back to the US. I think that the government could print as much as they wanted. The pension system has to buy them all.
Okay.
And particularly as that cohort gets into retirement, the more fixed income. So there's enough demand for fixed income to go on forever right now. Now, that's different in some countries, like in Europe, where it's potential to have a default. The central bank basically stopped that now by buying all bonds and putting it onto the ECB balance sheet. So I don't think that is the big issue. I think we're actually going to get closer to Japan buying all of its bonds in this recession, in which case you have what's known as a debt jubilee, where they can say, well, we owe it to ourselves, we'll extinguish the bonds. Nobody knows what that means yet. I have a feeling it means that the yen craters, but we don't know. And maybe it's amazing for the Japanese stock market as well at the end of this. But we just don't know because we're in uncharted territory in modern financial markets. Sure, debt jubilees are as old as the Bible. They've been around for thousands of years. So that's not new, but how it works in this current monetary regime is new. So it's complicated, but bonds are still safe.
Yeah, certainly something I want to talk about with Steve Keen when he comes on the channel next. But central banks are now talking about buying, extending into the corporate market. They're already doing that in some countries, but talk of buying stocks as well. In your mind, is this just turning Japanese, or what is anything worth anymore if there's no free market with a buyer and a seller determining price? If every time prices go down, central banks just step in and buy up these ETFs, what is the investing world turning into if that starts to happen?
It's turning into trying to meet the promises of the baby boomers. That they promised them a retirement saving and a life, and they've broken those promises. So really, if you break it down, we're all sensationalists about the Federal Reserve, but basically they're trying to deal with, and all the central banks are trying to deal with, an aging population. Japan has been dealing with it before. So the reason they're buying all this stuff is to try and release liquidity to the people who had the pensions, because if not, then you're screwing most of your population. And as a government, basic job is to try and look after your population. And they were given guarantees that weren't met. And so I think a lot of it is that. The problem is we don't know what that means. How far, what that actually, I think most of us figure out at the end of this road is something not right. What that means, I don't know. I think most of us agree probably it's a collapse of the fiat monetary system as we know it. But again, we don't really know. But, I think the hive mind has kind of assessed that is the most likely outcome, hence the rise of, the alternative world, as I call it.
Do you think that it's possible behind closed doors they are having these conversations? And when we say don't fight the Fed and the plunge protection team, but do you think they're saying, look, we have to just pump stocks and assets 7 to 8% in perpetuity, and that's the only hope we have to try and pay out these pensioners and everyone? They're kind of a trickle-down effect.
I think it's part of their calculation, but without realising it. I also think it is a false narrative that quantitative easing props up stocks, because it didn't do it anywhere else. Didn't do it in Japan, didn't do it in Europe. Never did, right? So it's provably false. It only works in the US. So there can only be two reasons. One is it means something more in a reserve currency. I don't know. I've heard that argument before. Or two, psychological. If it's psychological, we're all fucked. Because, as we know, the emperor's new clothing tends to reveal the truth, which is the fact that the central banks never had control of the situation in the first place.
I mean, my take on that is that the money that's printed, no matter what country it's in, will go to where it's treated best. And US equities we're printing money in Europe, and that money's finding its way into US equities. That's kind of my take on why the US benefit from all global QE. Do you agree with that, or?
Yeah, I mean, that's the dollar milkshake theory that Brent Johnson has, and I think that's probably true too. I mean, the US was the best place and is the best place in the world still for capital. It may change. Yes, that was the case. And when the dollar's going up and the stock market's going up and the bond market's going up, I mean, that makes it an incredibly attractive home for all the world's capital. And so, but I'm still not sure that will change on a relative basis, which is what matters.
Yeah. All right. Well, let's dive into, after all this has happened, and I mean that would have been enough for one lifetime for any investor. This week we had the oil crisis, and we've been talking about currency wars, and now we've got oil wars. So I think this is something I want to walk people through at home, how oil works, how OPEC works, and this is a great example to tie it back to bonds and the junk bond market, which is in a bit of a bubble at the moment, and talk about how some of these oil and gas companies might be defaulting on their bonds that they've issued. So do you want to walk us through your explanation of OPEC and this oil war, Raoul?
Yeah, so oil is obviously the most important commodity of all outside of water. The thing about oil is priced in US dollars. So if you think about the world economy, which uses dollars as the reserve currency, oil is actually the thing that oils the wheels of that, because so many hundreds of billions of dollars a day of oil gets turned over and money sloshes around. So the Middle East suddenly gets a load of money, and then suddenly discovers gas, and Canada gets a load of money. And it's all oil, right? And it's all dollars. Also, the countries who and the producers, so the shale oil guys, and the countries who pull oil out of the ground, they tend to have fixed costs that are dollar denominated because their income is in dollars. Right, like you're in Australia, so your fixed costs are in US dollars. So you don't tend to have cross currency, but they do. They have this weird mismatch. So the problem is the moment that the oil price falls, if you sell 1 million barrels of oil a day at $100, you've got $100 million a day of money coming in. So if the oil price falls to 50 and you sell the same number of barrels, you get half the money. So then if your debt costs you 50 million to service, well, then suddenly you're just at service costs and you're in trouble. And if it goes below that, so that's why it matters. And there's also global dollar shortage, and oil is the thing that moves dollars around the system. So if there's not enough dollars around because the oil price has fallen, it can create all sorts of problems. And we're seeing it in some of the emerging market currencies. We're seeing it all over the place. And it's the same true of the whole commodity market. OPEC's job within this was to understand that they had these constraints, which was their cost base, and they were like the central bank of oil. They needed to regulate how much oil was out in the market, how much, to try and keep the price relatively stable, because they knew if the price went up too much, it destroys demand, and if the price goes down too much, it destroys supply. So the idea is to keep it in the middle. And then Russia came onto the scene, and the US, the two big things. Russia came onto the scene in about 2000 and became an enormous producer of oil. So they were now the swing marginal factor of the global oil supply, and that's where Russia's power came from. The swing producer of all the global commodities, had more commodities than anybody on earth. So then Russia started dealing with OPEC, didn't want to join it, but wants to be part of the negotiations. And they wanted Russia to, because they thought if Russia doesn't comply, then we're in trouble because they're the big swing producer. So they call it ROPEC, Russia plus OPEC. Then 10 years ago, America figured out shale. And before you know it, they became the largest producers of oil on earth. So they were the marginal producer. The problem is the shale guys borrowed a ton of money to do this because it was expensive. And their cost of production kept going up and up and up. So cut to Friday. OPEC want to do a deal. We want to keep the price up. They can probably see their head and shoulders chart on the monthly oil chart, thinking this doesn't look good. We need to hold this up. We cannot break $42. Russia goes, nah, not interested. Now Russia has moved itself off the dollar.
Yes.
It's got its government's debt to pretty much zero, and has been hoarding gold and has de-dollarized their economy. So basically, they're in a position to do something here. Now, what is the game they're playing? And geopolitics is all theoretical and never provable. My thought process is Russia looked at the US economy, looked at the crashing markets, looked at the virus and thought, this is the chance. We can actually truly hurt the US economy by just doing this. And it doesn't look like it because it looks like they're having a fight with OPEC. But I think they're fight with the US and economic warfare. Now, the question is what did the Saudis role? What did the role the Saudis play? Did the Saudis just think, oh, well, Russia, you're not playing, we're going to screw you by flooding the market with oil at lower prices? Or did MBS, who's a friend of Putin, say, hey, this is our chance. We can knock the shale oil guys out of business. And my guess is that's what's going on. Now, meanwhile, the shale guys have enormous amounts of debt. And it's already wobbly because these guys are not very good credits. So the oil price goes down. And before you know it, the American bankruptcies start rising. And it knocks on because credit is contagious. Credit risk is contagious. And it starts knocking on through the biggest corporate debt bubble in history, which is the US corporate debt bubble. So that's why it's a really major issue.
Fantastic explanation. And for people who've been watching the channel for a while, the book behind me there, The Colder War by Marin Katusa, is probably my favorite book of all time. And he spoke about this. Have you read it, Raoul?
No, I know Marin well. I didn't know he'd written a book.
The Colder War, he wrote it 5 or 10 years ago about how those that control the energy assets are going to control the future. And he spoke about OPEC, Russia, the Saudis, shale oil, and it is all coming true as we speak. So for then those people at home that don't understand how oil works, Russia, Saudi Arabia, Middle East, they can put a straw in the ground and they have these huge oil wells and oil just comes, spilling out, and it's very, very cheap. Some estimates below $10 a barrel, and it's all privatized in Russia, state backed. They're all going to run these companies and they want to pump as much oil as they can, make as much money as they can. If they can keep that price of oil down and get it below, and some people are saying now it might hover around $25 a barrel or whatnot. A lot of these oil shale producers in Canada, for example, it's very expensive to extract it from the tar sands. In the US, you've got to push all these liquids and chemicals into these cracks and fracking and extract all this oil, and that's very expensive as well. So if these guys can keep it down at $25 a barrel and it costs these companies $50 a barrel, they've got all this debt that they've got to pay the interest on as well. They go broke.
And also, if you think of that equation, the $1 million at 100, and if it goes to 50, what the Saudis have said, well, we'll go to $2 million barrels. So they get the same number of dollars because all they actually need is the dollars to pay their debts. They can do that indefinitely. That's what the shale guys have been doing, is pumping as much as possible to get the dollars to pay their debts. Problem is, when it goes below the cost of production, boom, the whole lot goes.
Exactly. Really important point about that total revenue. They've got 1 billion barrels in reserves. They don't mind having to double their production if it means putting the US and all these guys out of business, and it takes years for them to rebuild that. They've got to do all that debt again. People don't want to lend to them. It creates a real mess, isn't it, for the US and that entire sector?
Yeah, absolutely right. And the knock-on effect's even bigger.
I just find this so interesting. I thought it was absolutely boring in high school, and now I couldn't think of anything more interesting than the macro world.
Yeah, I love it. Particularly now, right? This is macro heaven, even though it's pretty grim times. But for macro, you've got the fastest moving, most complex, most interesting jigsaw puzzle, 3D puzzle in the world. And so it's very intellectually stimulating for a lot of people.
And what do you think about Australia, Raoul? I mean, you know how reliant we are on tourism, education, commodity exports. I mean, I fear that we're the country that's going to be hit the hardest out of all the developed nations. What are your thoughts on that?
So there's an old expression that I've always had, which is suppressed volatility leads to hypervolatility. And Australia has been suppressed volatility for a number of reasons. Your superannuation system fakes the market, basically is like central bank buying.
Yes.
It fakes the property market.
Yeah.
You've been lucky you were just very lucky that your currency fell enough in 2008 and the China stimulus came when it came, and it just avoided a recession for you. Again, I'm using the word luck, and it wasn't a skill or judgment. Yes, you've got a currency that's very flexible, so it collapses in times of economic stress, which helps. Problem is, it doesn't help when there's no global demand for your goods. Your biggest customer, 76%, I think, of all of your exports go to two customers, China and Japan. You've got some real structural weaknesses that can get exposed in something like this.
And we're talking about before that that entitlement, and I think there's no better case than Australia, where, as you said, people my age that were in nappies during the last recession have never seen a rainy day, and that's why they've got record household debt. They've got these $1,000,000, $800,000, my friends, $800,000 mortgages. Then they've got their car. Then they've got their credit card loans, and then they still can't afford anything, so they buy their goods on afterpay. I mean, a month for us without any income is going to really put pressure on so many households and the banks.
And Canada's the same, uh, because again they got away with it for the same kind of reasons. And yes, they got hit in 2008, but mildly, and their property market's gone up and up and up. And I mean, I'm still hearing stories of crazy, ridiculous telephone bidding for houses where there's 6 people competing for an apartment. It's madness in Canada. And it's the same. You had the marginal buyer of the Chinese coming in, pushing up a lot of prices, plus a commodity boom. Those things made everybody feel like a hero. And it creates structural weaknesses. I mean, it always does.
Protectionism, globalism, socialism, that's the next thing I had on the talking points here, Raoul. Is this exposing how the interconnected world has made some countries that aren't necessarily very good friends extremely reliant on one another? I mean, look at the stats about medicines coming out of China for the US or to Australia. Even that one little part for the iPhone or that rare earth metal, if you can't get it, the whole supply chain stops. And some of these countries are realizing, wow, we are very dependent, and that outsourcing of cheap labor for that slightly better way of life for us is going to come at a great cost.
Yeah, I mean, globalization has a load of great benefits and a load of huge downsides. I urge anybody to read or watch the Charlie Rose interview with James Goldsmith. James Goldsmith was a famous Anglo-American French capitalist who stood up in 1996 and said, if you sign this WTO agreement, you're going to destroy everybody's domestic economy. All your labour is going to be arbitraged. All the labour is going to go away. Yeah. You're going to give your competitors an unfair advantage over you, and this is going to lead to civil unrest and populism. Cut to now, Donald Trump actually realises this, and he's right. Steve Bannon was the big pusher of this narrative. And they're right. I mean, globalization had done it. I mean, you can see it on every chart of what it did. Is it basically hold out? Wage growth collapsed in the developed world, and a whole number of things happened. But now there's even fragilities we didn't understand, which is supply chain fragilities. So I don't know how to solve for that, but it's telling me that we need to accelerate a number of things, including the robotization of manufacturing, so we can bring it back to home. Now, it doesn't bring jobs, but it makes a more anti-fragile system. So I think that's important. Problem is various people do own all the rights to rare earth metals and stuff like that. It's very difficult. Very difficult to compete with India on generic pharmaceuticals. So yes, I mean, some of these things are impossible, but you can change a lot of this. There's no reason you should get your iPhone component parts made in China. It can be made in the US or in Australia or wherever it may be. But in the globalized world, this is what we take. If we want the freedom of choice that we have and the low prices that we want, well, we have to pay the other way too, which is it's fragile. But I'm not sure any other system's less fragile.
And the response to that, we've already seen the Hong Kong 10,000 Hong Kong dollar handouts. Australia's talking about it as another handout. Do you think this is the catalyst for modern monetary theory, where governments are going to have to just spend big and choose who to rescue? We touched on this before. Well, is that the response we're going to start seeing this week?
Yeah, because I mean, it's very clear that quantitative easing helped the rich get richer. It helped corporations buy back their shares, of which the management had share options. It was a crass distribution of capital to the capital class and not the labour class. So I do think that a distribution of money or capital to the labour class is what is going to happen. I don't think, and this is a little bit of a complicated topic, but I don't think that the rise of the pension system created something that nobody realized, which is usually in the past, how the world works is you were the rich factory owner, you had money, you lent it to other people, you made your money work, you were capital in the system. And then you had labor, and they were the people who worked for you. And there was a balance between labor and capital. Globalization changed that balance because capital made supernormal profits because they were using labor abroad and not labor here. So labor in your own country had no bargaining power. The other thing that happened is the pension. So the pension, normally how the world used to work, and still works in, let's say, a country like India, is your savings are your savings and they're your retirement. But in a pension, you've given it to a guy on Wall Street who says, oh, I will, or in Sydney, who says, I will make these magic returns for you and you can retire. Right? It's that implicit guarantee we talked about before. But the problem is, in that situation, you, the worker who's worked in a factory his whole life and put his money in his pension, has now become capital because your money's being lent out to other people. You're actually taking risks you wouldn't do with your own money. But because there's somebody in between you and your money, you don't realize that labor has turned into capital without getting the reward for it. And you're taking all the risk. It's okay to be the rich factory worker and take the risk with your capital because it's your capital. And you understand that you have excess capital, therefore you can do stuff with it. But the poor factory worker or the teacher or the miner who doesn't have the money is finding his money is being lent out to millions of different people in this weird financial world of which he doesn't understand, shorting volatility and doing crazy shit. And that's a huge problem. And I think in the end, politics will address this. So I know we've seen the rise of the right in terms of socialism. I think the next outcome will be the strong rise of the left. And the rise of the left will probably come hand in hand with Neil Howe's fourth turning, which is a deconstruction of the existing infrastructure that we live in, or the existing kind of social contract with which we live, where the pharmaceutical companies, the oil companies, and let's say in the US, the gun manufacturers, or in Australia, the miners, get away with whatever they want to do because they pay the bills. And I think that has to go, because that is at heart of the abuse of the working people for the elite. And I know that sounds very Bannon-esque, but it's not. And it's not about populism. It's about we need a new system because this has been driven to breaking point.
A fantastic point. You guys just did a couple of week-long series on the retirement crisis. I don't know, you still got that 3-week trial for $1, Raoul? Is that still running? Or
yeah, it's a 4-week trial for $1, realvision.com. But if you want to know anything about what risks you're running in retirement, we did interviews all over the world on it. The risks that you're running, you really have to watch it. I mean, you owe it to yourself, particularly in Australia where it is really not talked about. It's brushed under the carpet, and I urge people, it costs you $1, just gorge on that content to get up to speed with the kind of risks you're running. It's super important.
Yeah, I can't recommend that enough. I'll link that below. But the thing I want to talk about that I got out of that, and we've spoken about in our documentary that we did a couple of years ago as well, was when you've got $1 million in your retirement fund, it looks great on paper. It's just a number on a screen. But now we've got these 10,000 boomers a day retiring in the US. We don't have that buyer to soak up the capacity. And if you told these boomers that, as you said before, hey, did you guys know you're lending out for this purpose, or you're shorting volatility to try and make that money? They'd say, no, whoa, I just want to lock in those profits and I want to retire on that $1 million. And that is not there. There's not a buyer, and there's not the money feeding into that system. So I don't know if we want to talk about that at all, or we want to go let people watch all those videos, but anything you'd add to that, Raoul?
Yeah, I think my fear is all the wealth is held by the baby boomers in their pension schemes. Yes, even it's skewed towards the 1%, but basically those guys have all the pension assets because the millennials are too broke to do it. And my generation, the middle of Gen Xers, we're too small a generation to matter as much. So the baby boomers have all the assets. In the US, because I know those numbers better, the average baby boomer is 66 years old. The average retirement age in America is 65 years old. And you're just about to go into a bad recession. Usually asset prices halve, at least. And they can't buy the dip because they're retired. So basically they're going to panic to lock in their number and it will have gone from $1 million to $500,000. And guess what? That's changed the next 30 years of their lives because they took too much risk in the last 5 years of their lives. The insanity of what these pension plans and financial advisors are suggesting people to get to their $1 million. You can get to $1 million. You can get to $1 million without realizing that it's a 10% upside, 50% downside gain. It's madness, and it should be illegal, and there's no fiduciary responsibility in this. And so it's one thing we've been screaming from the rooftops about on Real Vision.
So personally, everyone wants to know, what are you doing with your money? I mean, I know I've been very defensive in my super for some time, but for you, Raoul, the safest options, and if you're happy to talk about percentages, does someone want to go majority into US dollars or just to bonds and then smaller percentages into your gold? And we'll talk about maybe Bitcoin and that later as well.
Look, my allocation has been for a while is US dollar. That's been the majority of my asset allocation. Even when I was living in Europe, I switched everything, my savings, everything into dollars at 148.5 in the euro, which was quite a good trade because it's been down to 107, and I think it goes to 80 cents. So that's the majority of what I did at first to protect my capital, and then, as you know, I've been in and out of Bitcoin because I think of that as a call option on the future of all of this financial system. I think gold is just trying to protect the purchasing value of the dollars that I have, and then bonds, which were for capital gains for me, because I knew it was a really great trade. My trading strategy is now shifting away from bonds towards outright shorting of equities over the next month or so. I've been short oil. Luckily, on Friday, before all this happened, it was a complete piece of luck because you don't normally short something, it falls 25% in a day. And I'm long puts on the HYG, which is the high yield bond index, which is this theme we talked about with the oil blowing up and the pension funds having too much debt, corporate debt, and the whole shakiness of the economy. So those are my primary plays.
So for people that aren't options traders, one thing we've been talking about is shorting like the HYG or the J and K, these junk bond indexes over time. But for someone that's just really worried and wants to wait till the dust settles, there's no harm in going into basically all US dollars and just sitting and waiting.
Yeah, I think that's right. Now, the problem is everybody else is telling me that the dollar's going to collapse. And I'm one of these people who doesn't think that. I think the dollar goes a lot higher for a number of issues, including the shortage of dollars. And as this oil price fall feeds itself through, it's just another factor in there. I think if you're in Australia, you don't want to take that risk. You don't need to. Just own some, 1 year government bonds for the time being. Just sit out of it. It's okay. You don't need to be in the game. If you want to be in the game, sure. Start thinking about, do I want some US dollars? Do I want, a bit of diversification? Great. And if you're a bit of a trader, then can I profit from this opportunity? In which case you can short things or buy some puts, even though volatility is now expensive. So there's a number of different levels. But for every man, just to take less equity risk is a good thing. If you can direct any of your super, if you're in Australia, just direct a lot more to bonds right now.
Exactly. It's all relative. Like if you're in Australia, you're not necessarily worried about investing globally and whatnot. You're not too fussed if the Aussie dollar goes down a bit because it's all relative to your situation and where you live and whatnot. So cash is probably the most defensive at the moment. So let's talk about your thoughts on gold. And I think Bitcoin and a lot of these arguments fall into the same camp. Or do you want to talk about the differences? And then I want to get into maybe Ethereum and how a decentralized world can benefit from something like this where a lot of people might be working from home.
So gold, to me, if bonds was the first trade, so the economic slowdown is bonds, then when it starts hitting corporate earnings and bonds are pricing in a full recession, which they're doing now, equities need to do the same. The next phase of that is the response mechanism from the central banks, which, as you and I have just talked about, there's not much they can do apart from do some really extreme stuff that we've not really done before. Run the printing presses to run infrastructure programs or fiscal stimulus or propping up the pension system or whatever it is, but it's printing more money. And that generally is good for gold because it lowers the purchasing power of fiat currency. Whichever country you're in tends to work. So that's the next phase is gold. And the next phase behind that is I also think there's a risk that we lose the whole financial system in this next crisis, and in which case, and that's not necessarily banks going bust. It just means I think the whole structure of fiat currency and money printing and all of this just gets to extremeness, and therefore Bitcoin is the call option on that. And then when I look at it, we go one stage further. Well, if I look into that world, then Ethereum is my play on that world. You know, when you've got applications in a complex way in the tokenization of the world, well, that's the next phase. So it's a multi-phase world. Now, Bitcoin is, I think, that safe asset for a number of reasons, and I think Bitcoin is gold and Ethereum is silver. Ethereum has industrial use and some monetary use, and so it's a very nice way of looking at it. Now, we've just come out of a world where silver is not used so much anymore, so its value versus gold is very low, because in industrial cases we don't need it as much as we did. It's the opposite with Ethereum. It's when silver was just being used as, you know, the great conductive metal and a whole bunch of other stuff. And that's what I think of Ethereum. So I think of Ethereum at the right point in the cycle will probably outperform Bitcoin because it has the double use, and at other points will underperform. Fantastic. That's a great new trading world for us.
Yeah, for people at home that don't understand what Raoul means by call options, I might link a video below where we explain options. I think last time we spoke, Raoul, I said that I see Ethereum as almost the oil, but I want to change that a little bit because of the sort of rise of renewables and that these days. I think oil's kind of almost a dirty word these days, but I agree that Ethereum is more that industrial application, and now they're talking about changing the supply to be more finite. It does take on more of a monetary property, but again, that's still up for debate.
Yes, and again, you know, people don't like to hear, and they're thinking of changing those words. You know, in the purest crypto world, is hated.
Yeah.
In the applications world, is liked. So they're just two different things, and I don't like people comparing them. It's like, you know, I've been speaking to the Block One guys about their system, and again, it's a different system for different applications, and there is room for everybody to do different things and have different use cases. Because, you know, as I've talked about many times before, the sheer number of smart people, I call it the hive mind, who's basically beavering behind out of everybody's eye, literally thousands of people, the smartest people in the finance world, the technology world, mathematics world, are building businesses around a new system. And it's not just a financial system, it's a means of exchange, it's a medium of exchange, it's a method of storing, it's a method of verifying. I mean, it's incredible what is going on. And at one point, you can almost fade out of one system and fade into the other. I think I've been speaking to some of the people involved in the Libra project, you know, once that's off the ground, we all know that the central bank digital currencies are coming off the ground. Okay, why the central bank digital currencies? Well, because we need to get off this dollar monetary system, not in terms of the dollar American power. It's the mechanism, the plumbing of it that's broken. So if we can move to a different system, that's going to help. We can develop new plumbing, which is much easier to control when you're in a digital environment. Also, it creates the digital on-ramp and off-ramp between fiscal side, which is government, saving, or call it reserve currency, let's call it Bitcoin, let's call it the oil or the silver or the applications layer, which is Ethereum, and a bunch of other things. You know, it'll link the gaming world directly to the economy. I mean, everything comes together, and it is all happening. I mean, people are so far behind the narrative, and you and I have been talking. Hopefully, we'll do something on this to get people up to speed on the narrative, because particularly in the Ethereum space and in the Lightning Network space on Bitcoin and others, there is ridiculous amounts going on that people don't understand.
Yeah, I was just going to say, just quickly, I'm not sure how much you want to say for people at home, but how quickly has your view changed on that Ethereum and the decentralized world, and the conversations you have with really smart people? How quickly is their attitude towards all this changed?
I don't know, because Christ, I mean, people their narratives go from not this is terrible, you should buy gold, it's worth nothing, to I get Bitcoin or I get blockchain or, everyone's in a different space. So it's impossible to know where you are and what people are thinking. The people involved are involved in all aspects of it and don't see the world in terms of one tribe versus the other. This whole crypto world tends to be far too tribal because people start in currency and how can I make money? We're not realizing this is a whole new world we're playing and we can jump from one world to the other and integrate our worlds, and it's incredible. I don't think most people get it yet. Not even, I think I'm thinking a lot more about Ethereum because I speak to a lot of people who are investing in the space, active in the space, building the space, people contact me all the time, and I'm realizing it's Ethereum. And I'm like, okay, so this is telling me there is a huge amount going on in this space. And we already know about the Bitcoin space and a number of other stuff. So I think that Ethereum narrative is very far behind. People just think of it kind of as a bit of a Bitcoin light, maybe a bit shitty, without really realizing what its value proposition is and what its role in the digital world is. And I think because there is no overall owner, there's nobody to drive the narrative. And the narrative force of a bunch of companies all still developing is much less than the religious narrative around Bitcoin. So Bitcoin just wins at every point right now because of the religious narrative.
And you were saying maybe you and I will do something on Ethereum. Do you think that you've never met someone that doesn't work their way up that scale of understanding through education and just seeing firsthand, as you say, these thousands of developers and the exodus from the traditional tech world into this world? And is that all? In my mind, that's all that stands between more investors and more people taking the space seriously.
Yeah. How far does the education have to go? I mean, you're right. Everyone's got to stop being tribal to start and say, look, this is the world we're building, and they're building that bit, we're building this bit, they're integrating our place, they're building something over there, we're all together in this. Right? That's the truth. That's the actual truth. There is sub-narratives around it. And I think if we can educate people on, and nobody's really mapped that out as a theory yet to show, okay, this is the digital world that we're building, and this is how it changes everything from the old world, and this is where it brings a bunch of stuff we've never been able to do before together. Then people will understand. But if we continue down this path of even you and I talking about different cryptocurrencies, confuses people. When we should just be talking about the digital world. And they don't really care, do we run on MS-DOS or do we run on iOS? Or do we run on, nobody cares.
Yeah.
And they shouldn't care, really.
And I think it's just all bullish at the moment with people working from home. And what are the opportunities? I know something like Netflix has held up reasonably well because people can understand that narrative of there's going to be more people at home watching Netflix if this coronavirus plays out. Is that something that's pretty bullish for crypto, the decentralized world? What other stocks are you liking? What are the defensive plays? Because there's always opportunity, I guess, out of a crisis.
So, one thing it's good for is real vision. Because we're in the middle of a crisis. All we do is provide in-depth analysis on kind of finance, business, and the global economy. So, the growth in subscriptions has been absolutely enormous because of it. And the more people go home, the more they'll be watching videos, the more people have some free money to spend because they're, generally professional classes tend to watch Real Vision, so they tend to still get paid when they have to self-quarantine at home, but they're not going to restaurants, so they've got a few extra dollars in their pocket, so they end up subscribing to Real Vision, watching it so they can tune out the kids screaming in the background. That works. There's a business that I've been eyeing up. It's been plummeting with this because most shares tend to plummet when all shares plummet, but there's a business in America that a friend of mine's family used to own that I know from Little Cane, this small island of 150 people. Their family owned a company called, the code is HRC, which is Hillrom Corporation. And Hillrom was the world's largest maker of hospital beds. It's an American company, and it makes medical equipment. And it's just like a sleepy company based out of Indiana that if you go every hospital in the world, they've got Hillrom beds and the Hillrom equipment and all that stuff. And as we talked about at the beginning of this interview, there's going to be a huge shortage of hospital beds. So that was like a cheeky virus play from that respect. I think the gaming companies will do well. I mean, gaming is obviously something that people spend time on. People's allocation of leisure time to stuff will be interesting, or just moments of free time where they couldn't do something at work but they could do at home. So I think relatively interesting. I think it's good for some media in general. It's probably good for, but it's difficult because advertisers can't even film adverts at this time because everyone's shutting down. Nobody will travel anywhere. So it's a kind of weird world.
Exactly. And there's a lot of things that low oil as an input cost can be good for. I've got a video I want to do about how that's actually pretty good for the gold miners. If gold goes into a bull market and oil's $20 a barrel, then happy days for GDX, GDXJ and all the gold stocks.
Yeah, it's good for the farmers as well.
Yeah, agriculture for sure. Well, Raoul, that's, I think, everything I had on my talking points today. Anything that you wanted to touch on? Do you think we are going into something that's pretty nasty like the Great Depression, we're turning Japanese, or do you hope that this can pass after 6 months?
I hope that it passes after 6 months. I fear that it won't. I fear that everything we've been talking about, which is the debt bubble, the equity bubble, the central bank bubble, and the pensions crisis, and the aging population and the effect on consumption, all comes together at once. This could be I think there's a reasonably high probability, like a 40% chance, this is going to be the worst financial event we've ever seen. And we've got to hope that countries are responsible with how they deal with this thing. Because if we can take enough short-term pain, we won't have to take a big long-term pain. But if we do not contain this virus and it creates panic and it comes back fully in the Northern Hemisphere winter, then we're going into the depression and something much worse as the unraveling of that entire pension system and the debt bubble and everything comes underway. So, people watching this, I know it's alarmist, but please be careful and take less risk. Just go and speak to the guy who runs your pension plan, say what is in it, how much is in equities, how can I just reduce my risk a bit. There will be long periods where the market will go up and you'll feel like a fool. That's okay. Just say, I'm prepared to give up any gains over the next 18 months. Just say that to yourself, get comfortable with that, and then you'll be fine with it.
Fantastic. Well, I hope you guys have enjoyed that at home. Let us know your thoughts on all this in the comments below. I'll link Raoul's stuff and Real Vision as well. Any final thoughts there, Raoul?
I mean, we're covering a ton of this on Real Vision. Obviously, we've got everything from live broadcasts going on. We've got virus experts, we've got economic experts. This is the biggest thing we've ever done because it's the biggest story, potentially the biggest story of our lifetimes. So we're covering everything, and as you know, Real Vision is a ludicrous value proposition. It doesn't cost anything really versus the value you get out of it. But even just go to realvision.com, $1 is all you have to pay to get 1 month's access. And I promise you, almost everybody stays on because the content is ridiculous.
Absolutely. Well, Raoul, it's been a pleasure, mate. I really appreciate your time. I love these chats, and hopefully we'll do something on Ethereum in the future, and we'll talk to you guys again soon. Cheers.
Yeah, perfect. Look forward to it.
Thanks, mate.